Hello, traders. How's everyone doing? I really hope everyone enjoyed the conversation with Jack Schwager yesterday. If you weren't around to see it, it's out there on video and you could check it out on our YouTube channel. I enjoyed talking to Jack. We covered some very key points. Let's get to the market. One of my best calls and trades for the week was a short up here in euro at 22.65. So, you have about 80 pips. As I said, when I put the trade on, I think we're going to challenge the 121 handle, maybe trade 120 and a half. When I look at it on a weekly basis, I know it's not Friday yet. We had a 2-day reversal yesterday uh, where we closed 2 days ago. So to complete a reversal, under 2145 would do it for a weekly reversal for this week. We're still about 37 pips away. So it's still achievable. And I'm not sure we're going to get this steep to this moving average, but on the daily, I do have confluence of a lot of the 50 and 200 coming in just, right around the 120 level. So I'm not declaring this a euro top. I still think the dollar is going to come under pressure after this correction. I'm calling this a correction, and that we could still see maybe 24 and a half, 25 euro after that. So just trying to make a little bit of money on the downside here and then use what we've accumulated on this trade, looking for long positions in euro and most likely some type of turn in EG. So, the pound is very strong. And I talked about EG earlier in the week that it may be peaking here on a correction and that we have drive one and we have drive two, and perhaps we're going to get a drive three. And if that happens on the daily, we're probably looking at the 78.6 level being tested again, right around this 85.40. By then, we're probably completing this correction to the downside in euro and upside in the dollar for the next run. So, I do believe that there is going to be a nice buy in euro pound, but I still think that we have maybe another 50 pips or so, and most likely into next week, we'll see. We could also even make new lows in EG. I'm not sure that's going to happen. I'd be looking for some type of buying opportunity here sometime next week. Part of the reason we're heading down is strength in cable, and cable's held up quite well. But even if we make a new high in cable, to me, there's all kinds of distribution and all kinds of divergences up here. If we do make a new high, I think it's going to be mainly a stop hunt in cable because the high, the move that we had back here at the end of February was 142.40. And then the recent high that we've had up here on this reversal candle was 42.34. So do you think there's some buy stops above this high, above this high? I think that if they take them out, that's going to be a nice shorting opportunity. In cable, I still think cable could pull back towards this 140 to 139 and a half level. Um, I'm really glad I didn't go ahead and short U.S. dollar yen. Yields are heading up a little bit today. I just want to show you this. I was talking about a failing rally from up here, and it did, but perhaps what we're doing here is putting in a higher low to maybe attack the upside. To make a prediction on this in a sideways market, what a lot of people, in fact, what option traders could do is buy a volatility spread on the notes, on the 10-year notes, where your long calls, your long puts, and if it comes out of this range, you're going to have a big move either way. It's about 30 pips. So we break down, it could go to 120. We break out, we could go to 210. but right here in the middle, it's really just your bias that's telling you what to do. Um, and if we're going higher, that certainly means that the end still has some more upside. I was looking at this level that we've achieved twice up here. Here's one, here's two, and you're going to be able to see it a little better on a four. So we'll see what happens up here at this 109.68. Just something I want to point out, and I'll break out my telescope for this in the end, is that when you look at this, you had this huge move, right? Huge move. And part of this move was higher interest rates. And then we've been really consolidating in this formation for, you know, 5 years, since 2016, or you could even go back to 2015 if you want to look at it this way. And, we failed right here against this trend line. I know it seems, you know, a pretty aggressive narrative to have a move like this on a breakout, but I do think there's a chance that we could challenge the highs, and that's going to mean higher yields. So if I look at this, I have to think that there's higher yields coming and eventually a higher US dollar yen. Uh, I really don't want to fade the yen until I really believe that we have a significant high in the S&Ps. And you guys know I'm looking for 4,300. There's your monthly on the S&Ps. We're not confirming. And here's your weekly. Just really a chip shot away from new highs up here. I think the 2-week off number is 41.78, so we're trading above the 2-week off number. NASDAQ is not as strong. Again, starting to wane a little bit. We'll see if we have enough juice to get over 14,000. I'm hoping we do, because I'm looking to take some short positions sometime in the month of June. I'm thinking that maybe we go towards the June expiration. Sometime that's going to be a triple or quadruple witch. It's also going to be a change of seasons, and um, we've had quite a year from the COVID crash, but really started getting a lot of acceleration in March, April for this wave. So think that we could complete it sometime next month. So that's my view on that. Aussie, I was talking about Aussie really not performing for quite some time. And it, seems to be rolling over again from yesterday's highs, and think that we could trade in the 76 level, maybe down towards 76 and a half, take out this low, and then I'd be looking for a pretty good rally in Aussie. So, just working this correction down here towards 76.10 or 76 and a half, and then looking for 81 for the next move, which would be new highs for the move. See, we had this high at 80. I think we're going to pull back and then head up towards 81 on that. Had a big day in Canada with the dollar and with crude really being stiff. Canada's giving up the ghost. It looked like a breakout here. We're right back to the breakout line. Take a look at this. Here we are right there. So we'll see. It's almost tempting to give it a shot here, but with the market down 54 and we only have one day left in the week, I'm just going to leave it alone and just stay with my euro short. We tried to turn it. There's one day left, but to have a 2-week reversal, um, we'd have to close back over 121.08, which, is we'd have to get back all the gains that we gave back yesterday, that we gained yesterday. But um, I'm gonna just hold off, satisfied with the position that I have on. So I'm just gonna let Canada trade out this week and see what happens. Maybe we get one more shot down, and if we're gonna put in a higher low, I think I'll have a chance to do something next week. A lot of people looking towards 118 before the final bottom, but I think there's a chance that we still could rally up towards 122. We got turned back at this moving average here. So, we're going to see what happens here in the 50-day. So, Canada, for the first time, putting in some higher lows for several days now after this last low, moving sideways, attempting to break out. We'll see what happens next week. Right now, it's an I don't know, and we'll just leave it at that. Dollar index, the Swiss, kind of the inverse of the euro, and you could see, it had a nice little rally, about 100 pips on the week. It's the mirror view of euro. Okay, so if I'm looking for another, say, 130 pips in euro, we should be good for another 60 pips, to 100 pips in Swiss, maybe back up towards 90, 80, these highs. We're cleaning out some buy stops here. I think we'll clean out some buy stops over 90, 40 as well. Maybe even head towards a 91 level. But you could see on the daily chart a lot of resistance here at this 90, 80 level. So it could be another 100 pips or so on the upside in Swiss, and then we'll see um, it's holding the 78.6 level. So dollar, kind of steady. Yesterday, I think was just the beginning of a little bit of a squeeze in the dollar back to the upside. I don't think we're going to do much better than looking at some shorter term moving averages, maybe up here around, 90, 60 or so. And then once we take out 89.60, we could trade 88.60. So still looking for that number. But you see how it's holding here on the 4 hour, just a nice little pullback. Dollar looks like a better buy than Canada. Okay, so much stronger, even though they're both dollar pairs. Look at that and look at the dollar. So you stick with the dollar rather than Canada. Uh, even Swiss has a better look than Canada. So Canada is very contrarian call. I still think there is going to be a bottom there, but I'm going to take my time. It's trying to put in a little wick here. Take a picture of this. So, so far we're holding this 2070 level. And just so you could see, that was kind of the wedge line that I had from this high off this high. And right now we're holding it. But why buy the weak sister, right? You still have a nice red candle there. Just go with the Dixie. Completely different looking candle. Looks to be the strength and perhaps a Swiss, or just stay short Aussie or sell rips in Aussie, because I still think we're headed towards this moving average here. So gold put in a temporary top yesterday. I'm not sure this is it. I still think that we have a shot for 1920. Maybe this is just a little ABC, and we get one more push up there. Silver has been way underperforming gold as expressed in the gold silver ratio. The 68.5 level is a pretty big level, as you can see on the daily. It was a breakdown area, and we've gotten above it and then aborted. Is that going to happen again? We'll see. This week it did pay to pay attention to the gold silver ratio. I was looking for a bounce. We got a bounce. Now we'll see what happens. But diagnosing this correctly kept you on the long side of gold from last week rather than the long side of silver. So you can see the difference in how silver is lagging. I know that these fibs are making it look a little busy, but it doesn't take an expert to look at these two charts and see that silver has been much weaker. So while gold was making a new high, silver failed at the 61.8 level. Still think that there's some nice downside ahead in silver. I wouldn't buy it, and I'd use gold strength to sell into it. Let's move to the S&Ps now. Stock indexes pointed out this very important horizontal support. If you look left, markets, their memory is to the left. And we had a lot of important action at this 4180 level going back the last few months. And what shows that it matters is look how many tests we've had. In fact, almost too many tests. You had one, you had another one here, and then we got another bounce here. So, you know, we're not that far from a new high. The high was on this candle 42.44. So we'll see. You know, there's still a lot of people thinking we have a failing rally in here. I talked about strength into month end, and you know, that's what we had from last Wednesday's low, and really the semis led it here. They were down 2% at the opening and came back. So still looking for new highs. SQQ, which is the way I'm going to play the short side of this market. When you look at the daily, a little too busy there with the fibs, but you could see we're holding the 78.6 level here. I still think that we're going to break it if we get a third drive in NASDAQ right here. Really comes in clear on the weekly. If we could make new highs for the move, you'll have a 1, you'll have a 2, and you'll have a 3. And that's going to be above the highs at 14,080, I believe, is the high. So all we need to do is take that out. And you see it pretty clearly on the daily, too. You have 1 and you have 2 here's your non-confirmation. Even this was a non-confirmation. So if we could get one more rally sometime next month, I'll be looking at the SQQ as an ETF and also call options on the triple bearish Q. So something else that I'm monitoring going forward. The VIX tells me I don't have to be in a hurry. This was a great move, but again, short-lived. VIX looks like it wants to trade lower. You know, I don't have any reason to think I need to buy it here. I think I will have a reason coming up. Maybe we're going to retest this 15 level here. We'll see. You know, that was where we were at in April at the last major high. And oil has really been tough. I mean, it sure looks like, you know, it wants to go higher. I mean, the fact that it's recovered last week's break in such a huge fashion speaks volumes, but you know, I'm still trying to hold my shorts with stops over 66.50, which was not filled or elected. And I just want to point out how important it was for me to take partial profits down here on this candle, where I was able to put 50 points in the bank because I was short from 480. So really, you know, I'm only risking, since I took in 40 pips on the crude trade if we trade above the 66.50 level. Still a chance for that to happen. TLT pulling back quite a gap on this 2 hour. I'm wondering really what happened here. Thin market, is that it? Anyway, we had some news today, and I think it was weak. So we'll see what happens here. I still think there might be more left, but the interest rate picture has become muddied for me. Still possible this is just a wave 4 before we flush to new lows. Thought that with this higher low that we might have a chance for 143, 144. And that should keep the S&Ps going unless the reason behind it is risk off. And I just don't think we're there yet in the S&Ps. Looking at Bitcoin, this 40,000 level is important. It keeps trying to hold it. You know, when you look at the week, it's a pretty ugly week that we had last week, and an inside week this week, which is neutral. So just looking ahead, One of the most bearish things that Bitcoin could do is say we finish here, and I know today's Thursday, not Friday, would be for us to start off taking out this week's highs and then take out this week's lows. And that's how you can make a case for maybe 20 grand. The most bullish thing it could do is take out this week's lows and then later in the week take out this week's highs. Trades all, 24/7. So we'll see. Right now it's an inside week that's neutral, but it's neutral after a pretty big 2 week break, of what, 30% or so, 40%. So still caution, but we may get an idea if we get some type of outside candle. Let's see if I could find an example of that here. I don't see any. Oh yeah, this is pretty close. Um, Gives you somewhat of an idea on this high up here. We took out the high and then finished lower, and that was the break. So I like inside weeks because it could lead to outside weeks, which are pretty good signals. I'm not calling out any new positions, and something for you to keep in mind for tomorrow. Don't try and make your week on a Friday. A lot of it's going to be book squaring. Here's the GDX. When you look at this weekly on the GDX, this still could be a failing rally, and maybe we're going to get one more pullback um, back towards 27. There's a lot of confluence here, so nothing wrong with taking profits if you bought it right in here. Okay, I don't know if we're near a fib retrace level, but especially if you see 1920. I know a lot of guys are looking for a 1960. I'm not sure what's up there. 1921, we almost got to the 61.8, but 78.6 is all the way up at 1990. But someone I talked to today was looking at 1960 as an important level. So anyway, that's your look at the GDX on a weekly basis. One of the strongest gold shares, and Mike calls Newmont best of breed. So Newmont compared to GDX has not made a new high. This is why Mike calls it best of breed, because the relative strength of it. Although we have made new highs, if you notice on the RSI, we're not confirming there on the weekly. We're diverging. This still looks okay. I mean, on the daily, we've confirmed. So just a look at Newmont. Doesn't look like it's done. Confirmed on the 4, confirmed on the 2, up there. Here we go. So maybe next week, if you're long this stuff and we make new highs, even in Newmont, you take half off the table. Want to take a quick look at US dollar MEX. It's a risk off currency, and it's trying to base here. It's really a sideways mess. There's nothing that very choppy corrective patterns everywhere. Nothing compelling for me to want to take risk on that. If you're watching on YouTube, I invite you to come in and hang out with us on our platform at TradeGate Hub. There's a lot of posting going on, and if you like what you're seeing live, feel free to comment, give me a thumbs up, thumbs down. And now coverage of the grains. We had a bit of a setback in grains, but after this kind of move, I don't want to chase it. I'd like to buy corn, which is another, maybe $1.50 lower on corn and wheat. Maybe around this 620 level, wheat has given up the ghost the most. And beans trying to hold the daily 50-day. Would love to be able to buy grains on a sharp dip, and think we're going to need some type of bear market rally in the dollar to get that. Copper having a good day, trying to come back. We did diverge, but over 80, my ideal setups for picking tops are more than one non-confirmation, and the last non-confirmation being under 70. So keep an eye on copper if we make a new high here with the market in June. See if it has enough juice to close over the 70 level. I suspect that copper will be a sell when the S&Ps peak, and I still think there's could be over 100 handles left in the S&Ps to the upside. So any questions on anything I've covered here today? You know, our mission here at TradeGate Hub is to build up and edify traders every day. It's not an easy endeavor, and we hope we're adding value to what you're trying to accomplish. If you want to add value, you need to participate. You need to share your work. You need to collaborate. Don't isolate yourself. Collaborate. We have really top traders and analysts here at TradeGate Hub. I talked to you yesterday about Michael Venezia. You want to see Elements work prior to me coming on. And I think we have some broadcasts going on out of Asia too, so you could get the take from the other side of the world. We're here to build a community, and that means supporting each other, interacting with each other, and make this a place where you could come and share your ideas and have that be respected. And also bringing in guests to provide ideas, give you some intelligence gathering for you to consider in the trading weeks ahead. And hope that I was able to help you guys out. Maybe maybe the Euro trade you were able to catch, or Aussie still saying it's heavy, headed lower. So I got the direction of the dollar right this week, and think there's some follow through there. And that's how I'm going to wrap it with you guys for the week. Remember, don't just count your gold coins or silver bars or bitcoins or Doge coins. Count your blessings. Many people are not in a position to speculate and take risk. Remember what we covered with Jack yesterday, that even market wizards go through the struggle till they get there with losses and drawdowns, and they've needed the I don't quit type of mentality. I've had many setbacks in my career where I've had to regroup and start over. Today is my birthday, and I can say that um, you don't lose until you quit. And it's very important to have that type of resilience. Even Rocky Balboa got knocked down to the mat. It's not that we don't get knocked down in this effort of being a trader. The key is, do we get up? So I'm hoping my teachings with RSI and some of the pattern recognition things that I'm going over with you every day give you tools so that you're not dependent upon anyone. You're independent of everyone. So it's not just the trade calls that matter coming from TradeGate Hub. It's the teaching of methodologies that you can use for the rest of your trading career. And with that being said, everyone have a great trading session the rest of the day and tomorrow. Look forward to working with you guys again next week. And that's a wrap for me. Thank you for your attention. And remember, as I said before, don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. Have a great holiday weekend. The U.S. will be closed on Monday, so just keep that in mind. It's going to be very thin. Most markets closed here in the U.S. So have a great Memorial Day weekend here if you're in the U.S. celebrating it, and do your work over the weekend so that you're ready to execute instead of impulse trading. The best way to avoid impulse trading is to have a plan. And my plan is to go over the markets over the weekend and have some ideas before the action starts on Sunday night. Adios, everyone. Thank you. TradeGate Hub's the place for traders to become an ace. See ya.